Hi, this is Lara from Forex Info USA with your free US dollar index Elliott Wave analysis for the week ending the 13th of February. I provide a subscription service for Elliott Wave analysis of the euro dollar and the pound dollar on forexinfo.us. I'm going to be expecting that we'll have to put prices up in a couple of weeks or so if you would like to get in and lock in those low prices I currently have on my site, don't hesitate, do it now. If you wait a couple of weeks or more, you may find that they'll still be remarkably competitive, but they will be a little higher. I'm going to start my analysis of the US dollar today with a reminder again of the historical outlook. There's been a little bit of talk about perhaps we're going to see some significant downwards movement at the moment with the dollar, and this is why I don't think so. When you look at the wave count on a historical chart, you see a 3, 3, calls for a 5. This is an expanded flat correction which calls for wave C to be a 5-wave impulse movement up, which should take it significantly beyond the top of A, which is about 122. So in the next few years we're going to see significant dollar rises with corrections on the way, as we've seen here, although the next one will probably be shallower. So I'm going to take you now to a 10-year chart where this maroon 2 is analogous with this maroon 2. So now we're looking at our B wave, which is a nice complete A, B, C, with a 5, 3, 5 regular zigzag for this. And the ratios within this, wave A is just 4.79 longer than being 1.618 the length of wave C. So considering the long span, it's not as tight as one would expect the ratios to be, but it's fairly reasonable. Thereafter we've got a primary degree 1, a nice clean wave 1 up, followed by a deep over 0.786 for a wave 2 correction down, and we've started on our third wave up. For it to suddenly turn around and go back down here, we would have to count A, B with a very short C, and the correction would be significantly deeper than 0.786. Could have technically get right down to this point at the beginning of 1 here, which was 70.7, but this structure is already complete. It already has a nice long expanded C. It's already a 3-wave structure that's complete, and we've had a significant turn up now. I don't expect a trend change. Now the other reason why I don't expect it is a little bit more of a psychological reason. From an Elliott Wave perspective, Elliott Wave teaches you to expect change. Regular analysis teaches you to look at what's already happened and say that's what's going to happen in the future. It's simply a projection of past action onto the future, and that does not teach one to expect change. But using Elliott Wave, you're much more able to expect and anticipate trend changes. And this is not one of those times. I'm expecting we're in the beginning of a strong third wave rise up. So for that psychological reason, because I'm a pure Elliott Wave analyst and I've been using Elliott Wave long before I came to Forex, I'm certainly not going to expect a trend change at this time. So I'm going to take you now to a daily chart where this blue 2 is analogous with this blue 2. So we're looking at our recent rise. We have a minor degree, 1, 2, and the beginning of a third wave. It's not over yet. You could count this as a full 5-wave move, but it looks much more likely that it's expanding, and that's a much more common scenario. These bright blue lines are a base channel, which is really useful for figuring out when the upcoming 4th wave is over. From the beginning of wave 1, its lowest low, to the extreme low of wave 2, create a parallel line and lay it on the end of our first wave here. These lines will stay as they are. Wave 3 will break up through this line. Eventually it will end and turn to come back down, and you can expect this upper line to provide support and resistance for the 4th wave as it comes down, a likely ending point. I'm going to take you now to an hourly chart where this green 2 is analogous with this green 2. So now we're just looking at the last 5 days on an hourly chart. And here's the last corrective move down, very nicely contained in parallel lines for its trend channel, with a throw over during a news release. Apart from that, the news release movement nicely contained in a trend channel and forming our low. Here's another interesting psychological point. I've had a couple of questions recently about how do news releases fit with Elliott Wave analysis. Well, they fit quite nicely actually. I've often found, especially with the euro lately, as you have a news release, particularly non-farm payrolls, you can figure out, okay, if we're in a corrective move, I'll work out my Fibonacci ratios, and you can predict where that news release is going to spike to using Fibonacci ratios, or if we are in an impulsive move, using your targets. News releases tend to make the market do what the market is always going to do anyway, just faster. I have another friend who trades Forex and approaches it from a more conventional point of view, not Elliott Wave, and he was wondering recently why news used to explain US dollar falls prior to here, prior to the change in direction just in early January, in December last year, news used to explain dollar falls here, the same kind of news now is used to explain dollar rises. Well, that's fine from an Elliott Wave perspective, because Elliott Wave perspective teaches you not that the news moves the market, the wave structure moves the market. The market will do what the market will do. So, looking now at these recent rises, considering the apparent three-wave structure of this and the overall look, one could believe that this looks like a contracting diagonal, not very much contracting with a throw over in the fifth wave position, but a contracting diagonal nevertheless. However, upon closer examination, the math doesn't stack up. This would be the third wave, and it's longer than the first wave. In a contracting diagonal, wave 5 must be shorter than wave 3, which it would be, must be shorter than wave 1, which it is not. So that rule is not met. Now, the other reason why I'm not going to consider this as a contracting diagonal is in a leading position, it's a rarity. It's much more common to find diagonals in an ending position. What is much more common in this particular positioning, right in the middle of a third wave, is an extension, and I believe this may be what we're seeing. I'm going to go with this analysis interpretation because it is a more common scenario. So we may be seeing wave 1, 2, and within this third, 1, 2, and within that third, 1, 2, we should be seeing 3 strong, sharp upwards movement comfortably above here, and lows not going further lower than this. So at the beginning of next week, I expect we're going to see a continuation of these upwards movements, and I expect that these corrections within our further upward movement will become more shallow. This correction is shallower, then this correction is shallower than this correction. So I expect that trend will continue as our third wave continues to unfold. For that reason also, if this is indeed the beginning of an expansion, I'm going to give a longer target for this third wave green. I had a target for price equality wave 3 green to have price equality with wave 1. Now I'm thinking it's more likely it will be 1.618 of wave 1 or thereabouts, around about 82.74, give or take a bit. Going back to the daily and a longer term target, and we've still got at least a couple of weeks to go for this one, for wave 3 blue, it could be 83.5, or now I think more likely 87.76. We could get up to there in the next couple of weeks or so. And taking you also back to this 10-year chart, an overall target, and this is going to take maybe all year, for our upwards end of our primary third wave. If it reaches price equality with wave 1, it could get up to 92.97. Now that seems a little short. It may be more likely to reach 1.618, the length of wave 1, and get up to 104.58 or thereabouts. So those are my much longer term targets, and that's probably at least a year away. It depends on how fast it goes. So I have some very clear targets and very clear invalidation point at 76.61, Any movement down below the end of wave 2 blue, below 70.76.61, will invalidate this wave count. So a few targets, a clear invalidation point, and a reason why I don't expect a trend change. Watch the next news release, do your Fibonacci ratios, figure out your targets, and watch it reach those ratios and targets, sometimes remarkably accurately, and then you may view news releases from a different perspective, from an Elliott Wave perspective. That's all from me today with your US dollar index Elliott Wave analysis. I do hope this helps you in your trading. Again, if you want Elliott Wave analysis of the euro dollar and or the pound dollar, check it out, sign up now, and you can lock in those lower prices for yourself. I hope your trading week next week is awesome, and I hope all your trades are profitable.